Welcome to the Multifamily Investor Nation podcast. I'm your host, Dan Handford, and with me today is our special guest, Gabe Gruszynski. He's going to be diving in here in just a few moments on this acquisition called Walnut Manor, which is out of Hillsboro, Texas, which is just south of Dallas, just a little ways. It's 36 units, actually being converted to 37 units, and I'm sure we'll get into that as we get through the episode. But before we dive into that acquisition, Gabe, why don't you tell the listeners a little about yourself and your background and where you are right now in the multifamily space?
Yeah, sure. Thanks, Dan. So I guess, I started my career off in telecom, I guess going on 20 or so years ago now. Got out of I was in the Marine Corps Reserve. With some of the stuff that I did in the Marines, I worked on guidance systems. So electronics was sort of a natural evolution, and I, sort of found my niche in cellular communications. So up until about 3 or so years ago, that's all that I did. And then, so about three years ago, my wife got started in real estate, and I sort of liked what she was doing, liked what I was seeing, and also was reconnected with a buddy of mine who was in the mortgage industry, and he's very smart, but I knew that if he could do it, I could do it. So that's sort of the first path that I took in real estate was I went and got my mortgage license. Didn't really love it. So at some point we sort of pivoted into the single family investments, and then about I guess the very beginning of last year, we sort of made another pivot. We were actually looking more towards short-term rentals, but then COVID hit and sort of made a slight adjustment and really started focusing on multifamily. So
I'm sure that was quite a change and a shift in the beginning of 2020 to make that right in the beginning of the start of COVID.
Yeah. So actually our first our first property that we had under contract was right at the beginning of COVID, and we didn't end up taking that down. We ended up wholesaling that because of COVID. I think we got it under contract, I want to say end of February, and then COVID hit. I think that was like 2 weeks later, and so we ended up sort of pivoting on that and wholesaling it. Obviously I wish we could have kept it now, but yeah, it got us in the game, and here we are today.
That's good. Well, this particular asset you acquired in November of 2020. So take us back a little bit to the very beginning when you first heard about and found out that this particular asset was available for purchase.
Well, so we actually, had a marketing campaign go out, probably I would say it was in June. And now I probably wouldn't be doing some of those same marketing campaigns, but then we were doing a lot of ringless voicemail, and this owner happened to call us back probably end of June, early July, and like the location. It's right on the I-35 corridor, south of DFW and north of Waco. It's a county seat as well, so that helps. And it's right where I-35 split. So, one direction it goes Fort Worth, the other direction it goes Dallas. So, with NAFTA or whatever it's called now, the U.S. MCA or whatever it's called, it was a good location for us, we thought. So, spoke with the owner, a number of times, and ended up putting it under contract.
So walk us through the marketing campaign. Is the marketing campaign basically just the ringless voicemails, or there's some additional things that you did with that campaign?
I think that one was just ringless voicemail. We did do some postcards as well, but ringless voicemails what I like to do, just because I still at that time did have a W-2, so it it was a little more on my time. I didn't have to necessarily respond right away to things. So just what worked for me.
Sure. And with the ringless voicemail, obviously you have to start with a list, right, of phone numbers of these owners. How did you acquire, or how did you kind of cultivate that list?
So that was, I would say, mostly from Reonomy, and then they're sort of pre-skip traced, info, owner info.
So with that kind of a list, do you get a lot of them that don't get fulfilled, or I guess completed, because it might not be an actual cell phone number or something like that?
Yeah. So you can, I believe they are filtered by, they have, a filter for landline and cell. So yeah, I would go through and sort of filter those out, and then also go through, obviously do not call list, and as well as known TCPA, litigators or complainers.
So let's talk a little bit further about this phone call that you got from this particular seller of this property that you heard about on this particular asset. So they got the ringless voicemail, they returned the phone call to you, and they basically said, "Hey, got your voicemail. I'm interested in having you look at my property to acquire it." What happened after that?
Yeah, so we just, initially, first conversation, we requested, rent roll T12, and sort of spoke about the asset. I think we actually sent an LOI prior to seeing the asset, but just from photos, sort of a Google drive by on Google Maps, and what he told us about the property, it seemed like an easy winner. Yeah, it was, and then after seeing it in person, it was most certainly a great deal.
And I'm assuming this was off market, right? So he didn't have somebody else listing it with him, and then he just kind of brought you in. It was completely off market.
Correct. Yep.
Yeah. Okay. So direct to seller on this one. How soon after that phone call did you get boots on the ground and then actually go see that property?
So we went and toured it the first time after the LOI was signed. So within, probably a week.
And where are you located?
North of Fort Worth. So the asset sits about an hour and a half from me.
Okay. So not too hard of a trip, just to drive down there, take a look at it, and then do your on site before you ink the PSA, if you will.
Right. Yep.
So what was the asking price originally on this asset?
I want to say that when we first spoke, he said that he wanted, basically to match what he had an appraisal done for a refinance, so probably 2 years prior to that. And that was at 1.425. But we ended up coming to agreement at 1.475.
Why did you end up going higher?
That's what he wanted, and after seeing it,
okay.
He said that, if things didn't work out with us, he would go with the broker and probably list at 1.65, and I think he most certainly would have got that.
Okay. So got the 1.475 million as the kind of the final purchase price. And were there any negotiations back and forth, or did he basically just say the appraisal came in at 1.425 and I'd like to get 1.475, or I'll go list it? And then you guys looked at it, did your due diligence, your underwriting, and found out that the numbers made sense?
Yeah, really the only negotiation was, I think, on EMD. I think originally we had 1%. We ended up going, so instead of 15,000, we went 25,000.
Okay. And that was a request by the seller?
Yes.
And that EMD was Was it hard day one, or was there kind of a due diligence period and then it went hard, or kind of walk us through the terms there of the EMD?
Yeah, went hard after DD. So it wasn't hard day one.
Okay. And then did you have to put up additional money after the 30 days, or was it just the 25, and then it just went hard after the due diligence?
The only other money that we had to put up was to utilize an extension. And I
Okay.
think that was 5 or 10, if memory serves.
Sure.
Probably 10.
And the original terms of the offer, was it 30 days due diligence, 30 days to close with an option for extension, or was there more time involved there?
I think it was a 30, 45, and then 2 15-day extensions.
And 2 15-day extensions. And walk us through, you mentioned having to do an extension. So walk us through, what was the reason for having to extend?
I think at that point in time, the bank's counsel sort of muddied the waters a bit, probably about a week or two prior to closing. And then we also had to work with, so during due diligence, or actually during our initial tour, we saw that there were some issues with the roof. The roof had been repaired over the years, but looked like we could probably get a new roof. So we ended up having him file an insurance claim, and the roofer that he had worked with on that, he basically promised the roofer that he would get the job. However, the roofer, his price for like a 30-year architectural shingle product was about $20,000 more than we could get it for. So we had to sort of negotiate a buyout to him. So that also delayed things a little bit.
Mm-hmm. So talk to us a little bit about the finance. You mentioned the bank here. Talk about, did you end up going with just one lender and that was it, or did you have to switch lenders, or kind of walk us through that process?
Yeah, so we ended up going with the local community bank there that already had the loan, so they were familiar with the asset, and didn't have issues. The occupancy on takeover was, I believe, 69%. So and there's a reason behind that, but yeah, that's who we ended up going with. And terms aren't the best, obviously, but it was probably the easiest, the path of least resistance.
Sure. And what were some of those terms that you were able to get on the financing?
So it's a 20-year AM. I know I believe the initial term was 4 years, and then a 4 3/4 rate and 9 months of IO. So we actually first P&I payment here is tomorrow.
That's good. Well, if you could get more, that'd be nice, but
yeah, would have been nice.
Yeah. So it's a 20-year AM, 4-year balloon, 4.75%. Any prepayment penalty?
No.
So no prepayment. And this was with the local bank, you said. That's right. All right, good. And so let's kind of talk a little bit more about kind of some things that maybe happened during your due diligence. Anything that came up other than the roof issue?
That was really it. Also, I guess during the purchase, that was, I think, maybe another thing that delayed things. So two of the buildings, he was having the meter bases replaced. And with that replacement, because of electrical code and I guess the utility company, they had to relocate them down about, I think it was about 1.5 feet or so to be, I guess at a height where someone could work on them without being on a ladder. We actually just had to do another building here within the last month. So that was really the only things that came up: roof and the electrical, the meter bases. And the asset itself was solid. He'd put in quite a bit of work over the last few years.
So talk us through the business plan that you guys have for this particular asset. So obviously, having 69% occupancy definitely gives you some opportunity for improving that side of things. But walk us through the kind of business plan that you have and you see for this property.
Yeah, so really the business plan was just to get occupancy up. The reason for the low occupancy was the owner had a minimum 620 FICO requirement, which in a tertiary, market like this is pretty high. Someone that has a 620 FICO is probably going to be buying as opposed to renting in that market. He also had a non-refundable risk fee, so and it was quite high. So basically, to get into a unit there, someone was going to have to put in, basically 2 months of rent to get into a unit, which is, creates a pretty high barrier of entry. So we look to do away with that and go with sort of more of the market norms, like I believe we went with the 580 FICO and just a regular refundable deposit, probably a half month, I think, deposit. So that's that covers occupancy, and then we also planned on, since we're using, it's not on-site management, we wanted to convert the office to an efficiency, because it had a nice, actually large full kitchen and 3/4 bath. So we converted that unit to an efficiency as well, and that was really our business plan. We didn't underwrite any rent increases, although we've been able to increase rent significantly, I think, on a number of units.
So 69% occupancy. What did you underwrite getting it to?
I believe we underwrote getting it to, per CoStar, I think we were looking at 92% market occupancy. We're at 100% right now.
And what's the economic occupancy right now?
With collections, we haven't missed a beat. We're at 100.
Oh, good. So both economic and the occupancy are at 100%, which is great. And obviously, as you're renewing leases, of course, because being at 100%, you're trying to push the rents as well, I would presume, right?
Correct. Yep.
Yeah. And did you have any residents that were on like long-term, like leases that were now kind of month to month, which allowed you to execute it a little bit sooner?
No, there were no. I think there may have been 1 or 2 month-to-month leases, but for the most part, everyone was on a at least a 12-month lease. We had a number of tenants that had probably been in there at least 10, 15 years. So
what was the plan? Obviously, since you've been in there now, coming up on 9 months now, what did you do to actually market the property to get it to that point of getting to 100%? Because yes, changing the approval requirements of being able to get in there is definitely helpful. But what were some additional things that maybe you did or maybe you didn't do to try to get more people to come through there to be able to rent?
We honestly didn't have to do a whole lot. Just market them in more places. I don't think they were marketed on apartments.com, for instance, previously. That was a premium marketing package for this property manager. So that's it. The inventory in that market is a lot of the single family homes are end of life, I would say. Not a whole lot of upkeep on the single family rental properties in that market. And then a lot of the apartments, just aren't well kept either. So, I think we have probably one of the nicer properties, not, nowhere near the biggest, but it's probably one of the nicest and best kept. And the location is very favorable. It's, a block or so off of the, town square. And there's a nice grocery store just across the street. So.
What was the effective rent, the average effective rent when you took it over?
Average effective, I would say, it's probably right in the 565, 570. No, sorry, my apologies. It would be 95, probably 645-ish.
And where is it today?
We are probably north of, probably right in the 720 range.
That's not bad, especially when you didn't really underwrite for that.
Yeah, we've been seeing on the 2 beds. I believe we're getting on a renovated unit, we're getting 150 more a month, and on the 1 beds, 75 a month.
Okay, good. And you said you're using local offsite property management, correct?
Correct.
And how did you find that company?
So they were, the previous owner had been using them, and it was either go with them. I also have a buddy that specializes in some of these smaller rural Texas complexes. So it was either stay with them and not rock the boat, or maybe rock the boat and go with him. So we ended up just staying with the current property manager. So.
And what was the transition like going from the old, from the seller to you with keeping the same property management company? Because I know a lot of people look at it and they go, oh, let's switch out the property management company and try to make that, maybe that's one of the reasons. But obviously there were some the stipulations that the seller had for the property management company, which probably kind of handcuffed them a little bit in trying to lease up the property.
Yeah, it was pretty easy, and the seller was great guy, really easy to deal with. He was just a good old country boy. His word was as good as gold, and he had nothing but good things to say about them. And then after speaking with the property manager, they confirmed what we thought. And being able to easily fill the units up. It took a little bit longer than we had anticipated, but we got it filled. I guess starting probably about 4 months ago.
And was this seller local to that market?
He was trying to remember where he lived at that time. He lived probably within 30 minutes of there. That was another reason he wanted to exit. He was in the process of building his retirement cabin up in the mountains of Tennessee. So
that makes sense.
That helped fulfill his dream.
Sure. And walk me through the renting process or the rental process for a prospective renter when you have offsite management. What does the management company do? Do they actually meet the prospective resident on site, or do they have a model unit that somebody can just go into and they leave the key in a box or something like that? What's the process that they use to be able to allow prospective renters to see the property?
Yeah, on a normal day-to-day, they would meet them on site. So they would fill out an app online, and then meet them on site. So I believe there have been a few times that they've probably left a lockbox with keys for a unit, but generally speaking, they meet them on site.
Okay, yeah, that definitely makes sense there. Now, how did you end up structuring this deal with your investors?
So this was it's a 80-20 split. I believe we have a IRR hurdle at 20%, and it goes to 50-50.
No pref, just straight 80-20.
Oh, yeah, sorry, 7 pref.
Okay, 7 pref. And so 7% pref, 80-20 IRR, secondary IRR hurdle at 20%, and then it goes 50-50. What were the projected returns on this one?
Projected returns, let's look back here. I want to say that I'm probably looking at the wrong thing. Yep, I am. Sorry, So we're looking at on a 5-year hold. I believe we were looking at 22% IRR, 9% cash on cash, and right around a 2.4 equity multiple.
2.4, you said?
Correct.
It's not bad for a 5-year hold there.
No, I think we're going to exceed it. I think we'll be looking to exit probably within the next 6 months.
Wow, that's good. And what was the overall equity check on this one?
500,000.
And let's see, so 500,000. And how many how many investors do you actually end up having in this one?
9.
So 9 investors. And the minimum investment was what, 50,000?
50, yeah.
Yeah, 50, somewhere around there. Good. Great. Well, can you think of anything else throughout this acquisition that might be interesting for us to talk about that maybe we haven't covered just yet?
I mean, really, the trickiest thing was working through, sort of a payoff with the roofer who had worked with the insurance company, and he wanted to recover what he felt was his investment into that. So it was a little more than we would have wanted to have spent on that, but we ended up saving, like I said, I think $20,000 on the roof. So a few $1,000s made sense.
Sure. No, it definitely makes sense. So at the end of the day, the insurance was able to replace it, right? The seller assigned the policy or the benefits to the claim for you.
Yeah, he actually received the check probably a week prior to closing or within a few days of closing, and basically just gave us a check. It didn't cover the full cost of the roof, but it covered, let's say 60%, 70%.
Okay. Now, did the lender require you to replace the roofs?
No.
Okay. So they weren't requiring it, but you guys knew it needed to be done.
Yeah.
And how soon after closing did you execute on getting the roofs done?
The roofs were done. So we closed first week of November, and the roofs were done probably about 30, 40 days later.
Okay.
So in December.
And so the rest of that 40% came out of the 500,000 that was raised from investors, as far as like a CapEx expense or whatever.
Yeah.
Okay, good. I got 2 final questions for you. I think I know answers to both of these, but I'll let you answer to see what you say. So the first question is, what did you find that was kind of easier during this entire process that maybe originally you thought was going to be a little bit more challenging?
Well, I would say the lending went actually a little bit easier than I would have anticipated. Just staying with the local bank, they were relatively easy to work with up until their outside counsel got involved and sort of muddied things up. I think that was relatively easier, especially looking back, having sort of gone through the process on another deal or two. It was relatively easy.
Mm-hmm. And the opposite of that, contrasting that, is what did you find was harder than originally expected that maybe originally you thought was going to be easier?
Since we've been in it a while, I really thought we would have filled up the units a little quicker than we did. The way that we turned some of the units there initially, we probably would have liked to have got those knocked out a little quicker. So that's probably what was harder, was just not meeting expectations. I figured 2-3 months maybe, and we'd be pretty much filled up, but
took a little bit longer to lease it up after that, huh?
Yeah.
Well, let me have you take an opportunity now to share with the listeners how they can reach out to you if they have further questions for you about this acquisition, or maybe they want to continue to follow you further.
Yeah, sure. So you can always reach us on our website, gruszynskicapital.com. It's it maybe look in the show notes. The last name is easier than it looks. Can also reach me at on my cell at 205-531-5304. Then email is gabe@gruszynskicapital.com.
Perfect. Sounds great. Well, Gabe, thank you so much for being here with us today, sharing the insights regarding this acquisition. Looking forward to continuing to follow you as you close more deals, and also having you back on the podcast for future episodes as you continue to close more deals.
So there will definitely be more in the very near future. Thank you, Dan.
Awesome. Thank you so much. Appreciate it, Gabe.
All right.